Good afternoon. My name is Dustin Dupas, Chief Operating Officer at Tabs Group. I'd like to welcome you to another webinar where we share information on issues of interest to the CPG industry. Since January of 2013, Tabs Group has provided these webinars on a regular basis, and will continue to do so as long as we continue to grow our audience and deliver value to the industry. You can access the recordings of all of our prior webinars at webinars.tabsgroup.com. Our next webinar is scheduled for Wednesday, December the 9th at 2 p.m. Eastern Time. We'll present the second annual cosmetic study, Insight into the Beauty Consumer. Today's webcast will be the results of the Consumer Value Study on Consumables for Canada. This is the first year that Tabs Group has fielded questions to consumers about the frequency, purchasing habits of the consumables categories in the Canadian market. Our presenter today is Dr. Kurt Jetta, CEO and founder of Tabs Group. At the end of the presentation, we'll open the floor to questions that you can submit via the chat box at the top of your screen. It's the middle green button. I'd like to thank you, all of those that join us for these webinars, and also for helping us spread the word. With that, I'll turn it over to Dr. Jetta.
Thank you, Dustin, and thank you for all those attending today's webinar. I'm excited to share the results of our first webinar results from Canada. And just as a kind of a heads up, I think based on the sign-ups, there were actually a bit more people from the U.S. than Canada. And I'll do quite a bit of comparison and contrast between the two countries. So I don't want the people in Canada to feel slighted in the least. This is primarily the objective is to understand the market, but also to give the people in the U.S. some context. And also to see what can we learn from the Canadian market in the U.S. and vice versa, what can Canadians learn from what's going on in the U.S. So the methodology that we employ is we use TNS, which is an internationally recognized research vendor that they have a sample in many countries around the globe. U.S. and Canada are two of their bigger markets. And we talked to 1,000 adults, 18 to 75, geographically and demographically dispersed throughout Canada. This was done just last month in September 2015. And just like the U.S., in fact, it's the identical survey, we asked three areas of questions. First of all, what categories do they purchase and what's the frequency? And we're talking about food and beverage consumables. You see the list of high velocity categories like ice cream and yogurt and carb bev. These categories are a great bellwether for our consumer packaged goods industry overall because they account for 20% of retail sales, and they reflect major vendors such as Pepsi and Coke and Unilever and ConAgra and Kraft and Mondelez and any number of other of the mega CPG vendors that you think about in our industry. We then ask people's interest and agreement on their utilization of deal tactics. So do they cut out coupons? Did they use the circular? What ways do they employ to get better deals for the products, the consumables products they buy? And then finally we ask where they shop for these products regularly. And by regularly we define as 6 times or more per year. So it's a fairly low threshold. Think about the traditional grocery store is getting a purchase close to every other week or 26 times a year. So this is a channel-specific regular threshold. And we're not asking specific grocery breaks. We're asking for the channel in general. Once we get this research, we do some validity checks because our philosophy is if it doesn't align with data that you know to be true, then it's worthless. It should help us predict and explain other sources of information and other knowledge that we have. And so we first of all conduct an internal data validity check. So we're looking to see is there consistency in the data. We don't want people to say they're heavy deal shoppers, but then not pick any of the specific deal tactics, those types of things. But more importantly, we're correlating to what's going on externally. So, for example, in the U.S., our third annual U.S. study we presented last month, it showed that the industry was down as far as transactions goes, and there was only one that was up, water. And we were able to corroborate that, in fact, is what's going on. Trips are down overall, and you can see it in a lot of annual reports from executives as well as syndicated data. And then water was the one kind of shining star within those 15 categories. Also, as a caveat, we know that there's some understatement on frequency on some of these single-serve categories, such as carb bev or water, salty snacks would be in there. So when we report out an average purchase frequency of, say, 7.8, just understand that typically that is reflecting more multi-pack, larger size purchases. But all the other ones actually correlated very, very closely to what we would find in panel data. So today we're going to review 6 things. First of all, what are the key trends in the industry? How big are products and these various categories, frequency, etc.? Who are the key demographics that we need to pay attention to? What are the deal preferences of Canadians? Where do they shop for these categories? And then what are their attitudes towards a few of some on-trend concepts? Are they heavy online shoppers? Do they buy organics? And all as throughout this, we will compare the U.S. versus Canada just to give us some benchmarks and insights and kind of understand that question on are the markets more similar or more different, and where are the differences, and how does that affect the way we manage both markets? I think one of the assumptions if you read some of the literature when Target went up to Canada and failed, the post-mortem was, well, they didn't reflect the fact that the Canadian consumer is so different that they tried to put a cookie-cutter American approach to it. To a certain extent, that's true, but what we'll see is that there's actually quite a lot of similarities between the markets. But before I get into the data, let me just provide some definitions. When we talk about a very heavy buyer, we're talking about it in the context of a specific category, one of those 15 categories that I listed. And we define that's the highest level that they could have provided on frequency. It's once a month or 12 times per year. And it's a 5-point scale that we provide. So we take all those points, 0 being never buy, up to 5 as the frequent buyer, and we get a total consumables buying level. So we define a heavy buyer as 55 points or more over 15 categories, and then what that provides us is the ability to trend over time and across markets very easily. We also then define a heavy deal user in the context of total consumables. We don't ask about their activity by category. It's just within this sector overall. And that is defined as anyone that uses at least 5 of the 10 tactics that we talked about. So that's a heavy deal user. So let's get into the data. So the first thing we find, at least on penetration by category, and this is probably not all that surprising, is that there's more similarities than differences. I mean, after all, these are all pretty high penetration categories to begin with, and they're high in Canada as well. So just visually, you see that there's a high level of consistency in the percent of adults 18 to 75 saying that they buy certain categories. The big differences were yogurt, which is much higher in Canada, driven by real strong penetration, and what we'll see heavy buying in Quebec, which is very consistent with their French culture, because if you go into France, you see kind of aisles, huge aisles of nothing but yogurt. So it's very well developed in that market, and I think there's some hope by yogurt manufacturers that the same thing's going to happen in the U.S. and the English-speaking areas of Canada, and that may or may not happen. It's certainly kind of trending that way. And then in Canada, the sports drinks, the Gatorades, the Powerades of the world are significantly lower penetration. Less than half are buying that category. So you can see some of the other differences that are much more modest in nature, but overall the correlation between the two is very high, 87%, and you can also see on average the number of categories that consumers are purchasing is very similar, just less than 12. Now, we start to see more differences when we look at very heavy buying incidents by category. So in the U.S., they love the bottled drinks, and Canada loves yogurt and juice drinks. But again, we see overall there's more similarities than differences. So let's look at where the Canadian consumers have a higher incidence of very heavy buying. You see cookies, you see yogurt that we talked about, much higher, fruit juice and refrigerated juice. The U.S., you see salty snacks, you see carb beverage, you see bottled water and sports drinks. Now, we don't know definitively why these differences exist, but the one common denominator on the areas where U.S. is significantly higher than Canada is the importance of DSD in those categories. So what I'm hypothesizing is that there is a drop-off in some of the more rural, remote areas of Canada, and they may not have as much selection or penetration or something of that nature. And, when you talk about Alberta and Saskatchewan and those areas there. But these are all things that we can, are provable and, with further research. And again, you see a very high correlation, 83%, and the level of very heavy category buying. The U.S. is slightly more than Canada, but again, very similar. It's just that the things that they're buying in, very frequently tend to differ a bit. So now let's look at who are these heavy buyers of consumables. And the first thing we see that, and this is what we saw in the U.S., but even more pronounced in Canada, kids, households with kids, adults that have kids, by far are the most important demographic variable. So if an adult has a child, 18 or less, 45% of them are heavy consumables buyers versus only 13% for those without kids. I mean, that's a massive difference. In U.S., the gap was 38 and 20. You see the overall average for Canada is 21, so more than two times above average. So this is 24% of the adults have kids, accounting for more than half of the volume. But you wouldn't know that based on kind of all the discussion in the industry and trade shows. It's just at a conference. I mean, they must have mentioned, I stopped counting at about 15, but all the talk about millennials and really only one brand that happened to be a kids-oriented brand talked about households and mothers with kids. And you can see millennials is just barely above the average, and that's no different than what we saw in the States. I mean, there's just this ridiculously high obsession in our industry about millennials, and they really don't, their sales potential really doesn't justify it. And you figure millennials, I mean, most of them have a long way to go before they hit that next age group, which is the highest. And the only reason millennials are even above average is because just the seniors are just so low. You see 8 and 2%. So in Canada, we see very similar things to the U.S. by age and by kids presence. But the one interesting difference is we call this a marginal CPG consumption with income. So in the U.S., we did not see that. We saw consumption, the level of heavy buying of consumables was fairly flat once we got above the lowest income sector. Here, that it tends to keep going up. What that means is, all other things being equal, you would expect the Canadian market in this sector to do better than the U.S. The reason being there is, in fact, income growth disparity in both markets. So high-income people are tending to grow their incomes more than low-income people on a percentage basis. In the U.S., if this is flat, that doesn't really do you a lot of good. There's not going to be marginally higher purchases as income goes up. But in Canada, you do see that. And so that has implications on kind of very more macro, how's the business looking? How is it going to, how would you project this business over time? And so you would want to, and I've talked in other webinars about a lot of the macroeconomic factors that are affecting our industry, and that's certainly one of them is this income disparity effect. And then regionally you see, and I can't quite understand this, unfortunately I don't have quite the knowledge that I'm sure a lot of you do on the market, but the Atlantic provinces, so Nova Scotia, Newfoundland, etc., much higher level of heavy buying. Quebec is below average, British Columbia below average, and then the other two regions are right about at the average. So that would be an area, we just, based on limits of time, we were not able to drill down to, but it certainly we're available to, work with anybody that's interested in trying to learn more about that, because I'm sure there's some pretty important information that can be uncovered. So I wanted to just talk about these kids, the households with kids a little bit more. So of the 15 categories, 14 of them had a very strong skew toward kids. So, I mean, this is not just isolated to, serial driving things. I mean, this is across all categories. But you see the biggest gaps on an absolute basis, you see yogurt, fruit and refrigerated juices, cereal, as you would expect, and crackers. The only one that there was not a kid presence gap is candy. It's kind of surprising, but I guess we specified bag candy, which, there's a lot of purchasing by, adults for entertainment, etc., and visitors. So now let's turn to what deals are being used by Canadian consumers and how does that compare to the U.S. So the first thing we look at is kind of a cumulative build on how many deal tactics they're using. Remember, we asked 10. It's a closed-ended, so we gave them the options to pick. First thing you see is just how important deals are. In fact, it's not even an option. People talk about training the consumer to buy on deal or getting them off the needle or any of these other drug-addled cliches we can bring to bear. But in fact, 95% of Canadian shoppers use at least one deal tactic regularly. So they are employing one, and then a third of them, more than a third of them, use at least 5. I mean, so they are basically, there's a big chunk of consumers that just have an arsenal of different tactics that they're using to get the best deals, and they go to different stores and cut out coupons and they shop where there's an everyday low price. Overall, the participation is similar. The one key difference is that the non-participants in the U.S. is much higher. And that's something we've been tracking over the last 3 years, and it really lays at the door of how loyalty cards are utilized in the U.S. and not so much that we see in Canada. There's a lot of contortionary, deceptive, non-compelling executions that we see in the U.S., and it makes it very difficult for consumers to get those deals. And we've just noted this level of discouragement. In fact, there's been a 20% drop in this measure here, using at least 5 over the last 3 years. So it's has important implications on how manufacturers and retailers execute promotions up in Canada. Don't do what they're doing. Keep doing what you're doing would be kind of the top line conclusion there. So let's look at the specific tactics, and here's the 10. So we have 2 groups of tactics we call, first of all, active. I have to actually do something to get the deal. I have to cut a coupon. I have to shop around for the best deal or choose the retailer offering the best deals, get online and get a digital coupon, open up a flyer and read it and pick the best deal. Passive tactics is just I show up the door and I get the deal. It's everyday low price. It's buying private label, large sizes, or bonus pack. And then here's the people that don't do any deals. Let's look at active first. And first of all, in general, Canadians are much more active in seeking out deals. So you can see flyer usage much higher, and that certainly is consistent with the empirical work we've done up at retailers. I mean, you see Shoppers Drug Mart just kind of pounding out weekly circulars and just to no apparent negative effect. I mean, and you see, it's Uniprix, it's all the Loblaws banners, etc. And you also see, and this surprised me, is higher loyalty card utilization. And why it surprised me is because you don't see through the circulars just this obvious kind of overwhelming, coercive ploys to get consumers to use loyalty cards. So there seems to be some very clever usage and more of an overlay, like a lot of airline rewards and gas discounts and those types of things, where in the U.S. you're much more likely to see just kind of these crazy overlays on, buy 3, get $1 off, next time, plus $5, and then it's FSI overlay, and it's just like, huh? So and that's, I think, one of the big reasons why you see a difference in the utilization as well as then just the lack of, more people involved in getting deals overall. But on the passive deal tactics side, you see much less involvement there, and it probably is a function of lower Walmart share in the market. We'll get to that in a few slides, but what really surprised me, EDLP is a little bit lower, but what really surprised me is how low private label is in Canada relative to U.S., because you certainly read a lot by how strong the President's Choice brand is with Loblaws and a couple of the other kind of private label programs, but just in general, Canadian consumers not as involved and don't really report out that they're doing all that as much as the U.S. So in the aggregate, you see how a Canadian shopper is much more actively involved in seeking out deals, a 7% increase particularly with respect to flyers and rebates, and they're much less likely to employ passive deal tactics. But the thing to note is they're doing them all, just like in the U.S. I mean, it is a whole portfolio of deal tactics that they're utilizing. So they tend to be more active, but there still are at very high levels. I mean, 35% doing private label, 56% EDLP. Those are still very high numbers. So it's not just one thing that consumers are doing. Well, why is it important to understand deal activity? Is straightforward. More deals delivers more sales. I mean, there is a consumer out there, a heavy deal shopper and medium deal shoppers that will buy more if deals are offered more. And so what you can see, if we look at just kind of the light deal buyer, you can see most of them are light, and then you see a decent amount medium. Almost none of them are heavy buyers. And similarly, if I look at a light consumables buyers, almost none of them are heavy deal users. Now, so you can see that there is a very consistent trend here. One of the interesting things, and we see it slightly in the U.S., much more pronounced in Canada, and I would hypothesize it has to do with the fact that there's so many active tactics being employed, is you tend to see a diminishing return. So if there was this kind of overwhelming cause and effect, you would expect this number to the right-hand corner to be higher than the medium, but that's not case. Nevertheless, these two are still much higher than the light buyers. So, I mean, that cause and effect still exists, and you can see kind of more discussion about this issue and how we build the case for cause and effect causation and not correlation in some of our other webinars on webinars.tabsgroup.com. So we've done it for OTCs as well as all the former consumables. And what we'll then see is how important the deals are in determining share for some of these retailers. So one of the things that's really interesting is just how many more channels that a Canadian shopper buys in. So you can see across the board there's about a 20% difference between Canadians and U.S. for number of outlets. So banners are not included here. So in a typical market, you'd expect to find more big traditional grocery retailers in the U.S. than Canada. But in Canada, you're seeing a lot bigger presence from some of these channels that don't have as big of a presence in the U.S. So now, grocery and Walmart penetration is equivalent between the two markets. You can see that here with the 75 and 78 and the 57, 57. But here's where Canada really differentiates, is how big Discount Grocer is, how big Shoppers Drug Mart is as the number one drug chain, Costco, and then Dollarama is 34%, and 22% is all of dollar stores in general. So that you can see there is a much bigger gap here, and they all have a pretty significant presence, and we're going to really key on this Discount Grocer. Look at 2.5 times larger penetration in Canada than the U.S. So we're talking banners in Canada such as No Frills, Food Basics. In U.S., the equivalent banners would be Aldi, Save-A-Lot, and Winco. If we look at some of the other differences, Canadian Tire is kind of this, even though it's, you know, for those not familiar with it, I guess they sold tires at one time, probably still do, but they're actually much more like a mass merchant now, and they're the closest thing I could benchmark to Target. So you see Target more of a presence, and it's interesting that Target wasn't able, and we'll talk about reasons why they weren't able to make it in Canada. And then natural food. And the depth in club, there is less of that in Canada than in the U.S. You can see natural food, 17% penetration. Sam's is a 15% versus the number 2 club banner, Real Canadian Club, is only 5%. And then also, finally, very weak penetration of regular buyers on online in both markets. You see 4%. So, I went out of my way to say we set a very low threshold for defining regularly. The typical food retailer gets their shopper in at least 20 times, and usually 26 to 30 times a year. And here we're only giving the whole channel need to get 6, and only 4% of the people in both countries claiming they are buying there. So what we then do is take all of those penetration numbers, add them all up, re-percentage them, and that gives us what we call a share of mentions. And this correlates very highly with share of occasions that you would expect to see in household panel data. Understated a little bit for grocery, again, because we're not asking specific banners. But the key things are, and this is, you know, what you are relevant, is discount grocer. Twice as big in Canada as the U.S., more than twice as big. So it's a big presence. Now, if those of you that follow the trade press, you might recall that Tesco in the UK had major problems, and the big reason being is the introduction and the inroads made by Aldi and Lidl to discount grocers. In the U.S., you see big gains from Aldi and Winco here. But there just doesn't seem to be a lot of discussion about it. But I would suggest that this is somewhat of a bellwether of things to come, or the way we might expect to see an evolution of discount grocer. Some of the other issues, natural food, much lower in Canada than the U.S., and we'll talk about reasons why in a couple slides. Online, and this, 1.3% share in both countries. Now, in the U.S., that share has been 1.3 for the last 3 years. So and there's other metrics that I'll share that we don't expect that to grow anytime soon, in the next 5 years. But if you look at this entire landscape, retail landscape, you see a bunch of different outlets and channels. 6 of them have at least 10 share, each with a different value proposition. So it's easy to see why Target failed. I mean, lots of the postmortems focused just on how competitive it was relative to Walmart. That was the lens they were looking through. But really, it was their competition versus discount grocer and dollar and club, and I mean, even in like a Shoppers Drug Mart. And we'll see from some of the promotional data that how that affects market shares. And Target just wasn't able to adapt. They didn't have a specific value proposition that firmly planted them in that market. So here's where we then say, let's break the groups into light deal buyers, medium, and heavy. And what does that tell us about market share? Well, first thing you see is some really big differences. So you can see that the drug channel really takes advantage of the heavy deal shoppers. They're capturing, they increase their share almost 5 points by offering heavy deals. And just take a look at 104 weeks of any significant brand at random, Shoppers Drug Mart, you'll see that is not, I mean, that's real. That's validated and corroborated. They generate a ton of incremental revenue for all the drug chains do. Discount grocer, you see a big jump, and then there's not marginally better share with the very heavy buyers. Dollar increasing as well. That's something different than what you would see in the U.S. U.S. Is not taking quite as extreme advantage. And in Canada, we don't see the same thing in the U.S. Canada, the heavy deal buyers tend to increase their purchases online. But who's losing? You see a big drop, almost 10 points in traditional grocery. You see Walmart decline, but that decline isn't nearly as big as we see in the U.S. It was 3.5 points here. It's less than 1.5 points between light and heavy deal buyers, and we'll talk about why. And Club also sees a decline. Now let's break those deal buyers into active deal shoppers and passive. So I can be a heavy active buyer and a light passive, or vice versa. So let's look at active first. And so we see somewhat similar trends to what we just saw, primarily because active is the more predominant type of deal tactic. So 6-point drop on traditional grocery, drug gaining by their high-low strategies, Walmart declining, and this is a 2-point drop, and again, not as much as we see in the U.S. Big reason why there is Walmart's actually an EDLP hybrid in Canada, so they do high-low promotions, a substantial number of them, enough to have meaning and apparently and positively impact their business, or maybe not positive, but it mitigates the loss that we see in the U.S. among the heavy active deal buyers. Discount grocery, dollar again growing from active, which again is somewhat contrary to what we see in the U.S. and Club going down consistently because they don't really have a high-low promotional vehicle. The decline in traditional grocery when we look at passive deal tactics really is quite more. You see a real big drop. Walmart, as you would expect, among these passive deal buyers, where they prefer EDLP and private label, holding their own regardless of level of passive deal activity. Discount grocery. So you can see discount grocery and dollar. Why are they so big in Canada? Well, promotional execution and activity is one of the big reasons. And so to the extent that they try to follow suit in the U.S., you would expect to see losses in traditional grocery and losses in Walmart accelerate. I mean, there's definitely some learning to be had from what we see in Canada. Now we ask about some trendy concepts, and the ones I'll show you, I mean, all four of them have just a long way to go before they're mainstream. Even if you read the trade press, and not even the trade press, the mainstream business journals, you'd think that organics was, the big thing. Everybody's doing it. I mean, no question that it's grown. It's grown slightly, and it's still a long, long way to go to mainstream. U.S., it's 13%. People that say they usually try to buy organic drinks and snack. Canada, it's 8. So that's one reason why natural food is so underdeveloped, is just a lower interest in organics. But you can see even among the vaunted millennials, even in the U.S., it's barely over 20, and that goes down. So it's not as extreme of a age gap in Canada, but it's just low all around. It's just not a mainstream concept, and we actually get that corroborated with every retailer we ever talk to. Say, yeah, it doesn't sell all that much, but we want to be there when it gets big. Well, that it's still many, many, many years away from being kind of a big, productive type of opportunity. Now, I'm kind of digressing here. What we do see about organics is they tend to have a high degree of incrementality when they go into a mainstream. So it's kind of this balancing act. They don't really sell very well, but the stuff that sells is typically an incremental sale for the retailer. So it's just a question of how much they want to invest in that area. When we ask about diet or low-cal drinks and snacks, you see this, again, not as big, so about a quarter of the people, so that was the one that got the highest agreement. I found this very interesting, is how the interest in these type and usage of diet or purchasing went up with age. And so that, I would suspect, is one of the reasons why diet soft drinks and a lot of areas of diet, we see it with ice cream, we see it with frozen entrees, is because it's kind of aging out. The appeal are among people that aren't as heavy buyers. The heavy buyers are in this 35 to 54, and those concepts don't have as much appeal as they do to the people that just kind of just aged out of those age targets. Does anybody showroom in grocery? The answer is no, a resounding no. It's 6. Nobody's high. Let's move on. Heavy online shoppers. This is another one where, I mean, just kind of keep some perspective, it's a huge economy, a huge consumer economy, a lot of different sectors. Certainly travel and apparel and consumer electronics do a lot of business and online, but still overall, only 11% in the U.S. and 6% in Canada say that they consider themselves heavy online shoppers for all types of products. That's a very low number, and certainly, yes, high among your beloved millennials, but even that's 15. So again, this is, and that's a big reason why we see such low penetration of grocery. I mean, that's a whole, we could talk a whole webinar on why that's so low, but one of the big things is there's just not that many people that are heavy online shoppers to begin with. In the U.S., we found 2/3 of the people weren't buying any grocery online, 0. So 33% were, 67% not, and of the 33%, only 12% of them bought regularly. I mean, that's just a staggeringly low level of loyalty. And so that is why we say that online grocery is not going to be a factor for the next 5 years unless there's some radical change in technology, which, could be virtual shopping, something like that. But clearly there's been enough opportunity for consumers to adopt this new way to shop in this sector, and it's just not happening in very big numbers, despite what the shills would tell you. I mean, I know everybody's trying to hype it up and sell more stuff and sell their consulting, but sorry, I gotta get real here. So let's talk about some conclusions. First of all, there are more similarities than differences between Canadian and U.S. consumers, and the same would be said for retail, but there's definitely more differences on the retail landscape. Meaningful differences in consumer. There's certainly category level preferences. Yogurt juices bigger in Canada, bottled drinks in the U.S. Canadians, and this is an important one, much more actively engaged in getting deals. The deal levels, utilization is almost identical between the two countries, but U.S. tends to take advantage more of passive deal tactics, EDLP and private label. So, as disinterested in the U.S. are on these trendy concepts. Overall, as a mass market, Canadians are even less so. And finally, Canadians just in general are somewhat lower heavy. You just don't have quite as many heavy sector buyers, 21 versus 25. The meaningful retail difference is much more channel fragmentation for grocery in Canada. Discount grocery is highly developed. And I would, as I mentioned before, I think that's a bellwether for U.S. Aldi is growing. They're adding more stores. They're adding better velocity per store, and you hear Walmart not even talking about it, and that's an issue when they're putting all their money into online. And that's not just Walmart. It's Target, although Target has Target Express now, which seems to address that trend we see in the U.S. that is actually there in Canada, it appears. Smaller format in general, higher development in Canada. And then Walmart share, it's a big player in Canada, but just not quite as big as we see in the U.S. Kid presence, even more important in Canada than the U.S. About a quarter of the adults have kids, and they account for over half the transactions. So that's extremely high level of development. Just like the U.S., more deals drive more purchases, although there is some evidence of diminishing returns. So that would really warrant, on a brand-by-brand, category-by-category basis, really understanding where are the inefficiencies in promotional execution. And then online share, equally paltry, 1.3%, and it's been that way for the last 3 years. So we have tracked zero growth in the channel, and we've corroborated those numbers by ComScore and by Business Insider as well. They're both right around that 1% to 2% range. So what can we do? Well, we're seeing start a slow migration of in this whole environment of flat sales and cost cutting. A few more companies trying to, kind of fold Canada into the U.S., treating it almost just as another region. And there really does seem to be enough differences in the consumer and retailer that separate structures are warranted to take advantage of, to optimize the opportunity. That said, there really seems to be some major efficiencies by integrating analytics functions. There's so much to learn for an analyst on looking at shoppers or all the different Loblaws banners, and really none of that's done. I mean, that whole perspective, I hear clients all the time, oh, we're just promoting way too much, and oh, we're just training the consumer. I mean, look at any Canadian retailers. They're promoting twice, 3 times as much. And so that, particularly with all the consolidation here, Rite Aid now going away, you want it to continue to gain insight into your business. Start looking at Canadian retailers, I'm saying, to the U.S. And conversely, the Canadian companies should start looking at what's going on in the U.S., although I suspect they do more of it than we do here in the U.S. In general, EDLP hybrid is a better strategy than pure EDLP or high-low in Canada and also in the U.S., I would say. And that really is a function of the way consumers shop. They like to get their deals in a variety of manners: active, passive, private label, EDLP, circulars, flyers, digital, whatever. And so really to optimize, you want to align with the way consumers shop. The vast majority of the food and bev companies should be targeting households with kids, not millennials. That's not to say there's not a lot of successful new brands out there that have targeted millennials quite successfully, although I would add none of them are $1 billion. I mean, there's going to be a time when you get to such scale you can't just survive in a niche anymore. You're going to need to get some, the big dollars, and those big dollars are with households with kids. U.S. manufacturers need to start paying more attention to Aldi, and I would say U.S. retailers as well. Winco I would put in there as overall discount grocery channel. It's certainly made a major impact in UK. It's already big in Canada. It's growing in the U.S., and you just don't see anybody talking about it or writing about it. Here, also with this methodology, you can use these development figures. If you're a smaller manufacturer thinking about going up to Canada, you can use these development figures for some early planning. So, for example, your yogurt sales are going to have better sales. So the starting point is always Canada is about 11% of the U.S. But yogurt, if you're a yogurt manufacturer, that 11 should be more like 15 or 16 or maybe even 20, just given the higher penetration and buying rate. Don't overemphasize organics or e-commerce. Certainly there is niche incremental opportunities, but the way manufacturers and retailers, most notably Walmart, are investing, that seems to be the only opportunity they care about. When in fact e-commerce we're projecting is going to be a non-factor in our industry, and that's a big caveat, in our industry for the next 5 years, based on extremely low loyalty, low penetration. And then finally, we can use this survey technique also to benchmark the size of other countries and estimate market potential. If I wanted to go into, let's say, Liechtenstein, I could do a survey of the consumers in Liechtenstein or Kazakhstan. This is an extremely powerful survey methodology of these surveys. It's quick, it's cheap, and it's statistically valid. And we employ just a little bit of modeling to that, not a lot, but certainly any company can get, very cost-effective insights into any country they're thinking about going to because of these global suppliers of research. Now, what I would offer now is for a deeper dive, you can contact our Canadian office, a fellow named Rob Wynot. There's his email and phone number because, as I mentioned, there's a lot of additional opportunities to drill in by channel and by province and by demographic or by category, and so we're available to consult further on this information. But with that, I want to thank you for attending today's webinar, first one we've done for Canada, and I'll open it up for questions right now. Dustin.
So the questions, again, you can click the green button in the middle. That'll provide a chat window, and just type your question in there, and Dr. Jetta will answer from there.
Okay, we have one question right now. How do I explain the high development of discount grocery Canada versus the U.S.? I mean, the first thing just has to be high just overall penetration. So store count would be the first thing. But that said, I mean, there's certainly some other elements of that. And I don't want to get too technical. My theory is that because there's not the distribution scale in Canada as we see in the U.S., everyday pricing is higher. And so Canadians have to employ, and both the retail formats and the way that they shop for deals, they really have to be a little more conscientious on getting that overall purchase, that market basket down. And that's why discount groceries. So I suspect there's a lot of banners up there that are very high priced on average. And so it leaves a lot of room for discount grocers to come in. There are rumors and reports speaking to millennials starting families later, planning smaller families, and perhaps not planning to have a family at all. Does this pose a long-term risk to total groceries consumption, especially in Canada? Well, certainly it's a risk if you delay having kids, yes. It's also a risk when you're at home longer. I mean, that's one of the big reasons why millennials are just not as desirable of a target, is because what's called the boomerang effect. A lot of them are living at home later. They get out of college, or some of them never leave home, and they just are slower to start families. Now, there doesn't seem to be any major macro risk. I mean, I guess the birth rate is going down slightly, but that would not seem to be some kind of major risk, I wouldn't say. I mean, that's something that's kind of evolved slowly over time. Question, are we able to get a copy of this PowerPoint if you have signed up for the webinar? And correct me if I'm wrong, but I believe we're going to be sending those out, as well as a
That's